Good afternoon, ladies and gentlemen. Welcome back to the 20th of May weekly market review. As usual, I have my co-host with me here, Mr. Gerald Wong. How was your weekend, Gerald?
Hi everyone. My weekend was okay. I guess there's a public holiday that we have to look forward to this week. So that's helping to actually allow us to refresh and recharge ourselves.
Yes, much needed public holiday this week on Wednesday. Looking forward to that. But I think this week we also have some big US tech earnings. Nvidia, my favorite stock, will be announcing their earnings this week. And last week we also have the CPI data coming down. So US market actually hit an all-time high. And we also have SIA reporting the earnings last week. So I believe, Gerald, you will be going through some of this with us today, right?
Yes, that's right. So updating ourselves on the macro as well as some of the company corporate developments. Okay, as usual, before we start, just a bit of disclaimer that today's sharing is for information purposes only and should not be taken to be financial advice. We have the monthly Ask SIAS on the 12th of June. And if you have got further questions for Sunny and myself, do join this Ask SIAS session and you can register by scanning the QR code here. And if you find the sharing by Sunny and myself helpful, do leave us a review on Google. To join SIAS as a member, you can scan this QR code or go to the website, and the membership for SIAS would cost $12 per year or only $1 per month. Okay, so as Sunny mentioned earlier, we saw a fairly positive backdrop for the markets last week. We saw the S&P 500 going up by 1.5%. From a significance point of view, the Dow Jones actually breached the 40,000 level. So that is seen as a psychological level for some investors. And then at the same time, we saw the Nasdaq actually gaining 2.1% as well. Closer to home, the picture is a bit more mixed. We did see some gains for the STI, but the gains were not as significant as what we saw in the US market. So really the key data point that came out last week was the US inflation data. If you have been following our weekly market review, we mentioned in the previous week that this is something we are looking out very closely for, as it will give us an indication on what the Fed's next interest rate direction might be. So what we see here in terms of the US core inflation, okay, so this would take away the very volatile energy and food prices, is that it actually was at 3.6% in the month of April. And if you look at this trend, it has effectively been on a downward trend over the past 12 months, okay? So this data point was also below market expectations. So once again, driving investor expectations that the Fed might be then able to start cutting interest rates. So what we see in terms of the reaction across the various markets is that if it's to look at the US government bond yield, there was a slight dip after the announcement of the inflation data. And what we see here is that the 10-year US government bond yield came down to 4.4% from about 4.5% in the previous week. Okay. And if it's to look at the latest Fed interest rate expectations on what the Fed is going to do, this is from the CME Fed Watch tool. What we see here is that for the upcoming meeting on the 12th of June, investors are still largely expecting that the Fed will keep interest rates unchanged. But if it's to look at the expectation into the September meeting, then that is where investors are now expecting that the first rate cut will come through. Okay, so currently at 49%. And then if we're to look at the December meeting, that is where investors are expecting that we might see a second rate cut this year. Okay, so in terms of how this has translated to the Singapore market, we saw that the Singapore market was up by 0.7% last week. We saw ST Engineering performing well, but then in terms of the other stocks that did well, there were a number of stocks which are linked to the Chinese property sector. So that includes CapitaLand Invest, that would include Hong Kong Land, due to optimism around the Chinese market, as well as news that there might be more measures coming through to be supporting the Chinese property sector. Okay, we also saw the REITs performing well last week, as a result of the expectations that the interest rates might be cut, as well as a decline in the bond yields. Okay, in terms of the worst performers, there were a handful of stocks that were actually impacted by the news of the index removal. Okay, so we saw Seatrium going down by 4.4%, City Developments down by 2.8%, and Jardine Matheson, while there isn't any direct news relating to its index removal, but because it has a holding in Jardine Cycle and Carriage, that also impacted its share price. Okay, so I'll share a bit more later around what is this index removal and how does that impact the stocks. Okay, but before that, I wanted to go briefly into Singapore Airlines earnings. It is something that a lot of investors look at very closely and we get a lot of questions on. So what we see here is that SIA share price actually rebounded early in the month of May, but then it actually fell slightly after the results were announced. Okay, so what did the company announce? Okay, if we're to look at the earnings on a full year level, okay, net profit of 2.7 billion. So that is something that was seen to be a good profit for SIA on a full year basis, where it was able to grow its revenue by 7%. But on the other hand, if you're to look at the earnings in the second half of the year, then what we see here is that because the expenditure went up, the operating profit was down compared to the previous year by 19.5%. Okay, so this is what we see in terms of the trend in terms of SIA's operating profit. The driver of the strong profit really came through in the first 2 quarters of the fiscal year. Remember that SIA has a fiscal year ending March, so this will effectively be the 2 quarters that we saw early last year. Okay, so what we saw thereafter is that the operating profit has started to moderate, such that if you're to look at the Q4 earnings, effectively what we see is that the operating profit was down compared to the previous quarter as well as the previous year. Okay, so if we're to break down and look at what are the drivers of SIA's earnings, we start first by looking at the passenger yields. Okay, so this is where there might be some degree of weakening around the yields that it is able to make for the passengers that are actually flying on its flights. Okay, so if you're to look at the amount of money that they're able to make, that was down in the fourth quarter compared to the previous quarter as well as the previous year. Okay, and if it's to look at the cargo segment, what we see here is that once again, the yields also continue to moderate. So this is really a result of the fact that they benefited significantly post-COVID, where there were various supply chain bottlenecks. But given that we are now seeing more capacity in the market, the yields have actually started to come down compared to the previous quarter as well as the previous year. Okay, on the other hand, what we also see is that the expenditure for SIA is going up. Okay, so if you to look at the most recent quarter, group expenditure of 4.2 billion, so that effectively is an increase compared to what the costs were in the previous year. Okay, and this increase is a combination of both an increase in the fuel cost as well as the non-fuel expenditure. Okay, so the other highlight of SIA's earnings is really around the dividends. They announced a final dividend per share of 38 cents, and including the interim dividend of 10 cents, that would bring the total dividend to 48 cents. And with that, we are looking at a dividend yield of about 7.1%. Okay, so I think that is something that some investors do like because of the dividend yield that is actually above the Singapore market, but that is effectively offset by what we see in terms of the weaker operating profit compared to the previous year, as well as questions around whether the profit can be sustained going into next year. Okay, so that is it for SIA. Next, I'll talk about some of the big movements in the Singapore market driven by the index removal. Okay, so what we see here, especially if you're following the market on a day-to-day basis, on the 15th of May, we actually saw 5 stocks having fairly significant price movements. So Seatrium was down 11.7%, Jardine Cycle and Carriage down 4.3%, Mapletree Logistics Trust 3.7%, CityDev 2.2%, and Mapletree Pan Asia Commercial Trust 1.6%. So the news that came out was that they will be removed from the MSCI Singapore index from the 1st of June, and that actually impacted the share price. So in case you're not familiar with what MSCI Singapore index is, it is a bit like the Straits Times Index, which is a benchmark for Singapore stocks. So when the index removal is announced, what this may potentially imply is that passive funds such as ETFs that are tracking this index may then have to sell their holdings in these stocks to be able to meet the benchmark holdings. At the same time, active funds such as unit trusts, their managers may also sell these stocks to make sure that their portfolios do not deviate too much from the benchmark. Okay, so that has impacted the sentiment towards these stocks, which explains the share price declines. Okay, so amongst the various stocks based on a poll that we conducted, the 2 stocks that a lot of investors are looking at include Mapletree Logistics Trust as well as Mapletree Pan Asia Commercial Trust. So I'll just do a quick update on these 2 names. So Mapletree Logistics Trust, actually it fell on 15th of May at the back of the announcement, but then bounced back subsequently as a result of the better than expected inflation data, which also lifted a number of other REITs. Okay, so likewise, that's what we see for Mapletree Pan Asia Commercial Trust having a bit of a decline on 15th of May, but then bouncing back thereafter. Okay, so if you want to understand how this can affect various stocks, what we did was to look at previous incidents of index removals. And when I checked, there was the removal of Suntec REIT from the index in 2021. So likewise, what we saw here is that once it was announced, you saw the dip in the share price. At a point in time, it came down from about 153 down to about 141 cents per share. Okay, the index removal happened here on the day that we saw this very sharp spike in volume, which is seen in the red column. And then thereafter, what we saw is a gradual recovery in Suntec REIT share price, driven by the fundamentals of the underlying stock. Okay, so what we see here is that there will typically be some volatility around the index removal, but thereafter, what happens is that investors will still look at the stock based on its fundamentals. Okay, so in terms of what the fundamentals of Mapletree Logistics Trust and Mapletree Pan Asia Commercial Trust is, for Mapletree Logistics Trust, what we saw in its most recent update is that the DPU fell by 2.5% in the 4th quarter of its fiscal year compared to the previous year. Okay, so while the gross revenue went up, the net property income went up slightly because of the larger unit base. The DPU actually came down slightly. Okay, if you were to look at Mapletree Logistics Trust portfolio, the occupancy is still fairly healthy. This is really supported by the strong occupancy for its Singapore portfolio, where the occupancy rate was at 96.7%. So overall, they've been able to keep the portfolio occupancy at 95.9%. If you were to look at Mapletree Logistics Trust dividend yield now at about 6.6%, and that is above the historical average of the REIT. Okay, next, Mapletree Pan Asia Commercial Trust. In the most recent quarter ending March, we saw that the distribution per unit went up by 1.8% compared to the previous year. So what we see here is that the gross revenue and net property income actually went up, which was then sufficient to offset the increase in its net finance cost, such that the overall amount that was available for distribution rose compared to the previous year. Okay, if it's a look at the occupancy rate of Mapletree Pan Asia Commercial Trust portfolio, the Singapore properties, particularly the retail ones, continue to do very well, with VivoCity at 100% occupancy rate. But what we see here is actually a slight weakening of some of its overseas properties. Say, for example, the China properties actually saw a decline in the occupancy rate, which actually led to a decline of its occupancy across the portfolio. If you're to look at the rental reversions for Mapletree Pan Asia Commercial Trust, likewise, it's a similar trend, where the Singapore portfolio saw positive rental reversions, while some of its Hong Kong and China properties saw negative rental reversions. But because the reversions in the Singapore properties were very strong, that was able to offset the declines in their overseas properties. Okay, so for Mapletree Pan Asia Commercial Trust, now with a dividend yield of about 7.2%, once again above its historical average. Okay, so that is really a summary of what happened last week in terms of what we are looking out for this week. Apart from the public holiday that's coming up this Wednesday, we've got NVIDIA earnings on Wednesday as well. So that will be a barometer of the sentiment towards AI stocks as well as tech stocks in the US market. In Singapore, we have Singtel's earnings that is coming up, as well as a 6-month T-bill auction. So for those of you who are looking at various yield instruments, that is something that we can keep a lookout for this week. With that, I'll hand over to Sunny, who will share the technical analysis.
Okay, thanks, Gerald, for that detailed covering on what happened last week so that we are all up to speed. So all the indices has hit all-time high, including Singapore. We are also hitting like year-to-date high, though not really all-time high. But hence, we are also looking at some resistance coming into some of the major indices. Let me just go through on the Singapore side first. So today on the Monday morning, we are seeing the STI is almost flat, up down maybe about 1 point only. What I noticed on the chart was that you can look at the Bollinger Band, which is the upper bound, the black line, and the lower bound black line. It starts to converge towards each other. And that means that volatility is actually coming down in the past few weeks. So where would the next support level of the STI be? Same thing as usual. We have been looking at the STI chart since the beginning of the year. Always look at the 20 days moving average and the 50 days moving average to get back into the STI uptrend movement. So not a surprise here. I'm going to put the zone that we are looking at that we could possibly accumulate on the STI index, which is around the 3,280 points level to the 50 days moving average at 3,250 points level. So this is the level, if let's say a pullback happened, this is where I'm looking at to accumulate more of the STI index. Of course, year-to-date high over here, somewhere on the 2nd of May at the level of 3,324 points. That is the first resistance that we are watching out for. And of course, the upper bound of that Bollinger Band at 3,330 points now would also be a round figure that we are watching out for. If it hits this level, we might see some resistance coming in on the STI index. Indicator-wise, if you look at the MACD indicator for the past 2 weeks at least, is that there isn't much of a trajectory on the MACD line and the signal line, meaning likely it is going to be range-bound going forward in the next couple of weeks. On the RSI, we also see the trajectory of the RSI line looking to move into a sideways direction. There's not much of an angle of attack, I would say. And it's converging towards the 14 days moving average at around the 60-point level. So although 60 point is a good, healthy reading, but then looking at the angle of the RSI line movement, right? Likely we are going to have a pretty stable or range-bound kind of a market on the STI in the next couple of weeks. Hence, if let's say the range is going to be where the top side 3,324 points is, then the low point, I would say it will be on the low on 9th of May, which is around the 3,241 points. So this is the range that I'm looking at in the near term until the other indicators give me a sign that there's a change in trend or direction. Okay, next, let's move to the US indices. Firstly, of course, will be Dow Jones Index. We broke the 40,000 level for the first time in history. But I would like to caution that although 40,000 make a very nice headline, right? What will drive this market going forward will continue to be economic conditions like unemployment rates that we have to watch closely for. And of course, inflation needs to come down further to hit the Fed target rate of 2%. So regardless whether it's a new all-time high, a new 40,000 level, going forward, we still have to monitor closely what the economic situation is, where the macroeconomic environment is to make our decision on investing, okay? So on the Dow Jones Index, okay, new all-time high, no need to say. So definitely a resistance level, as you can see, testing the March high period. Will this be a breakout or a false breakout? It's hard to tell for now, but definitely I am not inclined to chase the uptrend that we are seeing right now. And I will still stick to the prudent strategy of accumulating near the 20 days and the 50 days moving average, which is currently pivoting around 38,700 or 38,600 level. Okay, so we are about 1,400 points away from what the numbers that we are seeing right now. So that is something of a gap that needs to narrow before I would consider getting into the Dow Jones Index again. Looking at the MACD indicator, although we do have the MACD line and the signal line both showing trajectory upwards, but if you look at the MACD histogram, the momentum of this uptrend is actually subsiding. So that means that we may see a converging of this line pretty soon. And the RSI is touching the 70-point mark, meaning it is going into the overbought region, and hence a technical pullback may occur towards the 20 days moving average line. So I will not chase the Dow Jones Index at this point, but rather wait for a pullback to the 20 days moving average before considering my options again. Okay. Next, let's move to the S&P 500. Same thing, 5,303 points, all-time high for the S&P 500 as well. We are about, let me see, 150 points away from the 20 days moving average, which is currently around the 5140 or 5150 level. Okay. On the indicators wise, we also see the trajectory of the MACD indicator line and the signal line trajectory upwards, but the MACD histogram is showing that this uptrend is subsiding, meaning we may be range bound going forward on the S&P 500. The RSI is also at the 67-point level. We are very close to the 70-point mark. In fact, last Wednesday, we had touched a high of 69 on the RSI, meaning we are going into the overbought territory and a technical pullback can occur before the index resume its uptrend again. So look for the 20 days and 50 days moving average now at 5150 and 5130. Average that out 5140 will be a nice point to accumulate again should a pullback occur on the S&P 500 index. Lastly, let's go to the tech-rich Nasdaq Composite Index. Definitely the NVIDIA results on Wednesday, I believe, will affect the Nasdaq Composite Index the most. And more prominently, we will be looking out on what is the outlook of NVIDIA earnings forecast going forward. So Nasdaq Composite Index, we also had an all-time high. We are now at 16,685 points. The 20 days moving average is around 16,060 points. So that is around a 600-point distance away from the top that we are seeing now, away from the index points that we are seeing right now. On the indicator wise, it is also showing the signs as per the Dow Jones Index, as well as the S&P 500, although we have a nice trajectory of both the indicators line on the MACD indicator. The MACD histogram is showing signs that this uptrend is losing momentum in at least the last two trading sessions. So if let's say today is going to be coming down again, then definitely you have a 3 data point analysis or reference to look at how far this run up since the middle of April will continue. So likely, I believe it will be range bound, and I'm looking forward to the 20 days moving average to accumulate on Nasdaq Composite Index again. And this is all I have for this week updates on the technicals on the indices. Anything to add, Gerald?
Thanks so much for sharing on the technical analysis. I think like you mentioned, a lot of investors will be looking out for the NVIDIA results. And of course, apart from that, the holiday that's coming up.
Yes, so I'd like to wish everyone a good midweek holiday, and we will catch everyone again next week, same time, same place on our Monday weekly market review. So in the meantime, trade safe and stay safe. We'll see you again next week on Monday. Goodbye.
Thank you.